Mark Gordon, goldenticker.com on Wednesday, May the 31st, after the close. This is the GDX. These are the gold miners. This is the gold miner ETF, made up of a lot of the big ones like American, Barrick, and Newmont, and so forth. You know, it's had a hell of a fall here. You know, not really doing much all year, and then when March came in, it just started a nasty, nasty dive here. And now it looks like we may have put in a bottom, 39.08 down here. Came on some very heavy volume, closing at the upper end of the weekly range. That's the sign of a bottom. They don't always work out like that, but this could be one. Now we've rallied back up here to this blue solid line here, which is the 10-week moving average at about 45.29, and we've backed off a little bit here, and now we're coming down here, back down to this red line here, which is the 4-week moving average, and we got a leg up here though. If we can make it through here and start closing above this blue line, then our next line of attack will be up here at the green line here, green dotted line, which is the 20-week moving average, which is coming in at 49.58. So just wanted to make you aware of this fact, you know, and what's going on here. We do have the signs of a reversal bottom here. Now when we look at a weekly chart, I'm sorry, a daily chart here, we can see the action here. The blue line now becomes the 50-day moving average, which corresponds, of course, to the 10-week, and the red line is now the 21-day moving average, which corresponds to the 4-week moving average. And we've got a move up off the bottom. A lot of black here, a lot of up days, a lot of higher highs, even on the down days. Here's a red day here that made a higher high and did not make a lower low than the previous session here. We had an outside day here which closed at the top of the range, nice and bullish, topped out here, pulled back, and here we are getting support here at this gray line, the 10-day moving average, which is now crossed above the 21-day moving average. So when you get the slower term, the faster moving averages crossing over the slower, that's a bullish sign, bringing more, probably the day trader crowd into the market here. And you can see the attack we're trying to make on the 50-day moving average. Got turned away here at 45.48. Certainly a close above 45.48 would be very bullish. We're at 45.64 for the 50-day moving average. And you'll see a lot of heavy volume here on the up days. That is accumulation. And that is a bullish sign. And when you look at this cluster down here of the big up days, you haven't seen this in quite a while. You saw a little bit of it back here in January of 2012, and which got us up challenging these overhead moving averages here, pulled back and then tried again. But you can see the precipitous fall that happened in March. Now, the 21-day moving average was our line in the sand up until recently. So we've broken through that. So I just want to make you aware of a change in trend. If you want to trade this on a shorter term basis, I would set your stop here at 42.72. You get a close or even prices below that, it could negate this little move here. You know, basically trying to play a quick pop up here to the 50-day moving average. So right now we closed at 43.78. And the 50-day is at 45.64. So you get a couple points move out of that if you want to quickly trade this GDX. But I'm looking at a longer-term perspective here, watching the gold miners lead the gold. The gold has not done much. In fact, it's been a little bit bearish here. Every time it's gotten up towards 1600, been knocked back. But the gold miners are seeing some accumulation. So there's a divergence in the markets here, money flowing more into the gold miners than the gold. And a lot of times the gold miners will take off before the gold takes off, so this is something to keep in mind. I'll keep you posted on this. Thanks for listening.